Breaking stock news. Nasdaq, TALK, HECUU. The truth emerges. 80% shareholder loss from HEIC merger to Talkspace Incorporated. Ticker symbols TALK, TALKW, HECUU, HEC, HECCW. On June 11, 2020, Hudson Executive Investment Corporation, HEIC, completes its IPO. On June 17, 2021, HEIC shareholders approve a merger at a special shareholder meeting and HEIC changes its name to Talkspace Incorporated. On August 9, 2021, Talkspace announces its Q2 2021 financial results, holds a conference call. Talkspace reveals issues relating to increased customer acquisition costs due to rising digital advertising costs while downplaying their impact, and confirms a material increase in customer acquisition costs since the beginning of the year. On November 15, 2021, Talkspace issues its Q3 2021 financial results, and reveals significant slowdowns and delays as well as a decline in conversion rates. The company also announces that its CEO and head of clinical services were immediately stepping down both from their positions and as members of the board of directors. Investors who purchased shares of Talkspace securities between June 11, 2020 and November 15, 2021, both dates inclusive and/or b. all holders of Talkspace common stock as of the record date for the special meeting of shareholders held on June 17, 2021, are to register their losses in a class action lawsuit filed against Talkspace Incorporated, formerly known as Hudson Executive Investment Corporation. The lawsuit filed in the Southern District of New York seeks to recover shareholders' losses with no out-of-pocket cost. The class action alleges that 1. Hudson Executive Investment Corporation, HEIC, had overstated its competitive advantage and due diligence capabilities with respect to identifying and effectuating a merger with target companies. 2. HEIC had conducted inadequate due diligence into then-private pre-merger Talkspace, or else ignored and/or failed to disclose multiple red flags concerning then-private pre-merger Talkspace's business and operations. 3. Talkspace was experiencing significantly increased online advertising costs in its B2C business since the beginning of 2021. 4. Talkspace was experiencing lower conversion rates in its online advertising in its B2C business. 5. As a result of 3 and 4, Talkspace was experiencing increased customer acquisition costs, and more tepid B2C demand than represented to investors. 6. As a result of 3 and 4, Talkspace was suffering from ballooning customer acquisition costs and worsening growth and gross margin trends. 7. Talkspace had overvalued its accounts receivables from certain of its health plan clients in its B2B business, which amounts required adjustment downward, and 8. As a result of 3 to 7, Talkspace's 2021 financial guidance was not achievable and lacked any reasonable basis in fact. Investors who suffered losses on Talkspace shares only have until March 8, 2022, to request that the court appoint you as a lead plaintiff. Acting as a lead plaintiff is not a requirement to participate in monetary recovery, but you must meet the deadline to be considered as a lead plaintiff. One law office is fighting for shareholders' rights in this court case, and that is New York-based law firm, Vincent Wong. Below this video is a link to register your details and losses. And they wanted us to report that any prior results do not guarantee similar outcomes, and this may be considered attorney advertising under the laws of your states. As a shareholder, you deserve to be informed and your investments protected. This stock news channel only delivers relevant stock information that directly affects stockholders. Subscribe and be informed.